to go into a little discussion on how does this affect your actual accounts. And just what do all those numbers mean? I mean, here's what they mean over a period of time. So starting, at the end of 2020, you had $100,000 and you started to make your move. Well, the first move is you start to outperform at this area, and you can see some of these balances, 141 versus 129. Those are both great returns, and that's a pretty good system. You saw in the next year, there was a little bit less drawdown, -6 versus -18. So the S&P is dropping 18% of its value, and we're dropping about 6%. So now this gap starts to increase. And every time we can increase it a little bit more, it just adds up. And over time, this is the value of compounding growth. So, the bottom line is at the end of the day, if you're holding the S&P $215,000, you've more than doubled your money. That's pretty good. However, if you can do a little bit better every year than the market does, this got to $362,000. You've more than tripled your money in just a matter of, 5 or 6 years here. That's pretty significant. And this is 400,000. What if this was a million and you're talking 2 million versus 3, or 10 million, or 100 million where it's 200 versus 300 million? These are huge differences with bigger numbers. And the trick is you've got to start somewhere. And getting the first $100,000 is really hard. Even if you had $1,000, you could start doing this, or $10,000. But once you start getting to the $100,000 or $200,000 realm, this starts, compounding on itself faster than most people can contribute to it. So I just wanted to run through that real world example of, I look at trades and I look at metrics, and to me, I can, in my mind, build this chart. But a lot of times it's hard to visualize because it's difficult. But this is the real world, what happened to the account balance following those two strategies.